are going to kick right off because we have a lot to get through and very little time. So, my name is Eva Salai. I'm currencies correspondent at the FT, and I'll be moderating this panel today. I would like to ask the panelists to briefly introduce yourselves and answer the question, what's the biggest problem with the cross-border payment system today?
This was supposed to be easy.
It's going to be easy. Come on, let's start with John.
All right. Good afternoon, everyone. John Frost. I'm a senior economist in innovation and the digital economy at the Bank for International Settlements. So I'm based here in Switzerland, in Basel, a nice 3-hour train ride away, so very convenient. Glad to be here. The biggest problem in cross-border payments, there are several, as you know, in the G20 work. There's focus on cost, on access, on speed, on transparency. But I think that cost is a really big issue that I think we're all worried about. I think the cost of cross-border payments, we all admit, is far too high today.
Thank you. David, can we come to you?
Yeah, Dave Treat. I lead Accenture's blockchain and metaverse business. You listed 4, so we're just going to get progressively harder. But the friction of a message-based infrastructure that's old, super old, right, that needs to be modernized is what's before us.
Cost messaging, and Michael?
Right, Michael Miebach from Mastercard. I can think of one more to add to the list. It's a pretty comprehensive list, and that is generally the point of access and reach. So all of this is true, but not everybody can access everything they want and not reach anybody they want.
Thank you. Jen?
I knew that was going to happen.
Right.
I was there with access. Jen Lassiter from the Digital Dollar Project. We are a US-based nonprofit that works on US central bank digital currency experimentation with the private sector. And, oh gosh, okay, I'm going to say we have pretty safe networks right now. So I'll take all 3 of these and I'll raise them with security in the future, right? So how do we do this? Noting our new technologies that are at hand. How do we continue to maintain security and create deeper security as we use new technologies to get faster and more efficient and more cost effective?
Well done,
and
thank you.
Access.
And Yuval?
Sorry, Yuval.
Hi, Yuval from Digital Asset. I'm going to take a term that I heard someone from Mastercard yesterday use, which is glocal. So I think that one of the challenges but opportunities in payments is how to create a global payment system that could actually interact with some of the local rules that, as we're seeing with this geopolitical situation, evolve very quickly.
Excellent.
Thank you so much. So we'll pick up on all of those hopefully during this panel. But where I'd like to start is actually where the benefit of the current payment system, which compared to perhaps the alternatives at this point, stability and security. So could we just discuss a little bit of what's been happening in crypto recently? It hasn't exactly been, stability is maybe not the right word to describe it. So let's try to sort of focus a little bit on how we could get this technology onto this global payment system, which is so important to be stable. So what are the key kind of pinch points, do you think? What do we need to consider first? Yuval.
Well, first of all, make sure they're stable. So everybody, I'm sure, here heard about UST Luna. The fact that they described it as a stable coin is a bit of a joke. And I think that education and really taking these systems that have significant consequences. I mean, in the case of UST, a lot of people have lost their life saving, which is horrendous. I think that if you think about some of the global systems that manage payments, this stability is kind of like, if you don't have it, you can't even get started because the consequences are pretty far-reaching beyond just what happened. So to me, stability, privacy, security are some of those things that really have to be thought through and designed very carefully in order to implement these things.
For the panel as a follow-on, how do you do that? Okay, so we have this technology, we have these goals, and we have these current systems. So where can we start? Does anyone have any useful pointers?
I have a starting point, which is language, and making sure that we're talking about digital currencies in a very intentional way, because they are different, even within stable coins, right? Like Yuval just inferred, different degrees of volatility within that asset class. So a cryptocurrency is different from a stable coin, which is different from a central bank digital currency, and they are all digital currencies. So we have to be cognizant of that as we're talking about what type of asset we are building for. We're building for all of them, but are there different impacts when we think of privacy and security in that context?
Anyone else? Michael? You?
All right. I think agreeing on a set of principles is a good starting point. So stability, Yuval called it out. When you think payment stability matters, because you either pay too much or too little if you don't have stability in the middle. So that's pretty clear. Regulatory compliance. I think that not everybody's screaming for regulation, but it does reduce the noise because there's predictability. Therefore, there's more trust. When you have more trust, there's more usage. If we want to make this promising technology live up to the potential that it has, which is revolutionize the existing payment system, then we need that. And I think the final piece is around thinking around the user and what is the user worried about? Where's my data going? Who's at the other side of the transaction? Is this appearing into the ether, or is it actually reaching who I want to pay? So consumer protection, I think, is the third one. And I think if we sort them out, and it would be hard to think that somebody disagrees with these principles because they're pretty all-encompassing, and I think that can direct the industry across the board in the right direction.
I'd like to add to that too. I think is spot on. The other thing is that the awareness of the solutions we have today are not going to be the solutions. Whether it's the current infrastructure or all of the amazing innovation that's happening in the digital currency space, we're at the beginning of this, and to be able to not judge not judge the rollout, the scale, the applicability, the utility based on how it performs today, but be inspired by what we can do today and look through that, because I think the experimentation that's going on around the world is challenging some fundamental orthodoxies that we need to do it in an even much bigger way, right? The whole notion of, work that we've done together, right, around challenging the notion of fiat currency has to be cleared in domestic infrastructure, right? That actually a central bank could get comfortable enough with the platform to be able to actually clear it in a foreign jurisdiction. That is mind-blowing, right, for a central bank, right? We need to, I think the more we can be, to your point, principle-based around what we're inspired by the technology to do, but then look through it to, the amazing innovation journey ahead of us and not be constrained, I think is a deep challenge, because I think we're all eager to implement, and get into production. But if we do that too quickly and ignore some of the creativity we could apply, I think we'll regret it.
And do you think that, the current dynamics in terms of geopolitics and globalization seem to be kind of rolling back rather than going towards more global ways. So how will that kind of jar with with projects like cross-border payments and blockchain? Any thoughts?
Well, we're a global company, so I have a few thoughts on that. First of all, I wouldn't give up on globalization. I really think that would be getting ahead of ourselves. There's some stumbles in the road. Yes, there's some trust issues and fragmentation on geopolitical differences and an actual war. So all of that is going on. But at the same time, what is happening is that like-minded nations are starting to come together and say, well, we need data flows. We cannot have an archipelago world. We got to work together. And this will go right back to the topic that we have. Because if you have interoperability, cross-border engagement, similar standards to make stuff talk to each other, if some local system, somebody comes up with a solution somewhere else, it's got to talk to some solution somewhere else. And I'm pretty hopeful on that. And I think there's more and more people in the crypto world stepping up and actively, not just inventing stuff, to your point, but engaging actively with regulators. I just talked to somebody in Brazil and said, well, I went off to see the central bank governor and explain them what the regulation should look like. And that included the aspect of cross-border. So I think actively leaning in, being principled, I'm pretty optimistic.
Any other thoughts on that?
I just want to double down on interoperability because I think that I agree that globalization is not going, but also from a technology perspective, we're not going to have necessarily only one infrastructure. And I think this idea of competition and collaboration is going to be one of the key aspects for adoption. Players that are going to see offerings that are very closed and are saying, you are there with us or not with us, I think are going to fail long term. So I think in order to even achieve that beyond just technology, the point that Michael was saying around standards is extremely important because people are going to implement things using different technologies, but if you have good standards, that's the only way to achieve interoperability.
John?
So on this issue of whether globalization is continuing or not, I mean, the indicators that we have access to now are showing that it is continuing, even despite the pandemic. I think that people were kind of expecting, the pandemic may have already led to some pullback, and now, of course, the geopolitical tensions you mentioned. But, if you look at global trade, if you look at cross-border e-commerce, if you look at parcel data or at migrants remittances, all of this has increased. And if you look at the longer trend, I mean, we're seeing a really dramatic increase in the demand for cross-border payments, and also the demands on cross-border payments. So people expect cross-border payments to be much faster than they were in the past. Migrants who are sending money home to their families want it to really be there, quickly and not a week from now. They want to know upfront, what the costs are going to be. So I mean, I think that. There are certainly some stumbling blocks, but I think that the payment system shouldn't be one of them, and the payment system ideally should support that kind of cross-border integration that we're seeing in the real economy.
I might just prove the old adage that there is no such thing as stupid question wrong. But who regulates the current cross-border system?
So we have a world of nation states who have domestic agendas, of course, and we have various international organizations that allow them to work together. The Bank for National Settlements, of course, brings together 63 central banks around the world. The G20 has a number of institutions that bring together the 20 major jurisdictions, and in some cases also other regional groups. I think that there isn't a single cross-border payment system. There are a lot of arrangements. There are different components, for correspondent banking, for financial market infrastructures, for securities markets, and of course there are different institutions that are responsible for those different pieces. But I think that there is high-level coordination. There is a lot of work ongoing today. There is a G20 agenda on cross-border payments in particular. And I think that there's a lot of cooperation at the global level on really improving the cost, speed, access, and transparency of payments. And I think that work is yielding fruit.
We're going to come back to a few examples. Michael, please.
Yeah, so I think that's all true, but it's also true that every cross-border payment is domestic on either side. And therefore, what you get is a landscape that is very complex. So central banks do talk to each other, but in every country, there's a conduct regulator. There is a consumer protection office of some sort, and everybody is coming in, and the privacy people. So it is a very, very complex landscape, and those regulators very often do not talk together in a given country, and certainly not across border. So when the European Union comes to a particular regulation, you see that one arm of the European bureaucracy doesn't talk to the other. So it is complex, and I think as a sector, as an industry, as like-minded people, we can help connect the dots. I think we really need to, because otherwise one regulator can stop a really good idea just looking at it through a very narrow lens.
And regulation came up so often, and in the context of cost and stability. So should this system stay the same? We just need to swap the technology and just sort of simplify the sort of operational side of it, and we'll continue with John regulating the cross-border payments arena, or should there be a completely new body for this? Do you guys think?
I definitely think that things should change. David used the term message-based systems, which inherently have a lot of reconciliation built into them, which is a massive part of the inefficiency in pretty much every asset class in the world, including payments. I think that there's a lot of ideas that did actually stem from crypto, which is this idea that assets could move away from your system, be processed on someone else's ecosystem, while still adhering to the rules of the issuer. So imagine if Mastercard had a conditional payment that they know that they will be able to satisfy and approve, even though it doesn't get processed necessarily in one of their systems. I think that there's a massive opportunity for innovation and advancement, but you have to accept new technology and innovate.
Anything? Yeah, Jen?
Yeah, I would just also add that we've been putting Band-Aids on our 90-year-old system for a very long time. And what that has allowed is for perhaps some limited immediate relief, but not attacking some of the systemic problems that exist because our system is so old. So if we go back to the principle-based approach, what are the problems we're trying to solve? I think real-life experimentation about could this technology generate these outcomes that we're looking for that change the system at large and perhaps allow for those systemic principles. Financial inclusion is one of them, I think one of the most important. Does it allow us to build a system from the beginning that can work for most? I don't know if we could build one that works for all, but we'll try.
So obviously we don't have to agree on everything in this panel.
Definitely not. I encourage you not to agree.
Makes it more interesting for sure. I think it's important to be pragmatic and see what problem are we trying to solve, not throw the baby out with the bathwater. Some stuff works really well. For example, you go and travel to Davos and use your Mastercard and that works. But why don't we solve problems that are actually unsolved? You look into export-import business, accounts receivable, accounts payable. It's a mess. It is unsolved. Somewhere in between, there's various shades of what problems people actually have. It's important to start with a use case vis-a-vis these general statements that say anything out. I would be careful with that. In many countries, you have exceptionally efficient account-based payment systems. Look at Singapore. I mean, like, why would they change that? But they do think about cross-border, and they have a particular use case they want to solve for them as Singapore being an import-export hub. And programmability and conditional payments, that's something. I'm totally a fan for that, but wasting massive investments, that's not a good idea. And if Band-Aid is an interesting word, you can improve things and extend the lifeline, absolutely, but let's keep working with what's working.
Yeah, maybe the tweener. I think the other thing we really need to focus on is the wider context for, like, why was the payment initiated? What was it for? What transformation is happening before and after that the payment payment is almost always or maybe definitionally is always one half of the reason for the transaction, right? The good or the service is the other part of it, and there's massive innovation happening there as well. And so to your point, right, if you take let's just take that supply chain example, right? So order to cash, procure to pay, trade finance, and logistics have always been really run, operated, and innovated as separate domains, when lo and behold, they're all about the same palette of goods and they all require the same payments, but it's wildly complex. And so, being inspired by the technology that actually we can generate the transparency, overlay digital identity, use tokenized the tokenization of the good, the tokenization of the asset, the good, or the currency. Like there's a whole model here to totally think about that differently. Not just about the payment itself.
For the record, I agree with both of you. I think what is the problem we're trying to solve? And you have to invite the users into determining what that problem is. We can't tell them what their problem is. And experimentation to understand if the tech will actually solve it. I think we have a lot of hypotheses around what we think this new technology can do. We need actual data to know that it can do that.
I'm going to come to you, John, if that's okay, because I'd be curious to get a little overview from you on what central bankers are doing with these digital assets, and particularly central bank digital currencies, how it all fits into this landscape that we're talking about.
Absolutely. So there is a lot of work going on at the global level. As people may know, and may have seen, recently, a survey of central banks by our colleagues noted that 90% of central banks are now working on CBDC work globally. So that's up from 80% 2 years ago and 86% last year. I mean, it's now the vast majority of central banks that really are working on tackling these issues. There are 3 live retail CBDCs in the world. There are 25 ongoing pilots. There are 65 announced CBDC projects. These are both retail and wholesale projects, and of course, especially in the wholesale space, we're seeing quite a few projects that are cross-border, that actually involve collaboration between different central banks, really focused on cross-border payments. So that includes, projects by our colleagues in the BIS Innovation Hub, working, for instance, Project Mbridge, which is with the Bank of Thailand, HKMA, People's Bank of China, and the Central Bank of the United Arab Emirates. There's Project Dunbar, which is with the Reserve Bank of Australia, with the Monetary Authority of Singapore, the Central Bank of Malaysia, and the South African Reserve Bank. Project Jura between Banque de France and the Swiss National Bank. So there are quite a few different projects ongoing, and I think that, as to the question how this fits in, CBDCs are very often using innovative technology, very often using permissioned distributed ledger technology, to connect different central banks and to allow for functions that weren't available in the past. But they are quite different, I think, than the permissionless DLT space, than the blockchain space and crypto assets, in particular because it's central banks, and central bank money that's behind it. And I think that brings the benefits of central bank money, which is stable. Central banks, being public institutions accountable to society. But central banks aren't doing these projects alone. They are, of course, engaging quite a bit with the private sector, with private banks, with non-bank players. And I think that there is quite a bit of potential for CBDC projects and for multi-CBDC arrangements to allow for new payment rails that the private sector can use, and that there can be quite a bit of competition on. And I think that can drive a lot of progress and innovation. In a way that, by construction is a lot more stable and more likely to fulfill public policy goals.
Michael?
So immense momentum in this space. I think the time horizon is years out for this to be coming in at scale, but I think it's important today to already think through how you will get utility to your citizens if you do this as a central banker. And I think the simple way to think about this is a digital representation of cash that's already there. And in theory, it should live in the financial system, in a new financial system that will be built alongside with it, as well as in the existing financial system. Because if you want to buy a cup of coffee somewhere, then you should be able to do that. So we're engaging with, at any given time, between 25 and 30 central banks on this topic, and so design choices, and what do you do, and how do you solve the coffee cup topic. So the last mile questions and all of that is what central banks are starting to think about, and I think that's just the right thing. So when it comes, it really makes a difference. Today we have one live where we're partnering with the Central Bank of the Bahamas, of all places, the sand dollar. And that is actually a current question that they're trying to solve. It's the last mile, and how does this actually make a difference for anybody in the country? In the end, technically, we are ready. We said whenever the first central bank comes along, we use it as a settlement currency alongside euro, dollar, whatever is in our system. So we're hoping that you guys will all invent cool stuff.
Yeah, I think the last mile is a very important point, because I think it also reminds me of not all countries have stable internet connection. So what are the challenges with all of these digital systems that suddenly, if you have countries like China or India that are talking to eradicate cash and now everything is digital, what happens if you don't have all the infrastructure that exists in Western countries? And that's another big challenge when you think about this space.
Go on, Jim.
Yeah, very, very important point. And I was just going to add that the research that we're doing on CBDCs, particularly on retail CBDCs, has also looked at financial inclusion and how retail CBDCs can play a role in financial inclusion, drawing on the experience of central banks, particularly central banks in emerging market and developing economies. And I think it's important to say a couple of things. First of all the central banks that we're aware of, are planning for CBDCs to complement cash. They're not planning to eradicate cash. And I think that there's a lot of work as well on offline payments, which is quite exciting. I mean, if you look at what the Bank of Ghana, what the People's Bank of China, also the Central Bank of the Bahamas are doing. They're really thinking about how can we make sure that the CBDC remains accessible, even if there isn't power connection or internet connection. There are a lot of security issues around that. How do you ensure there's no double spending? All of that. There are some technical, challenges, and I think that there are different solutions to that. But thinking really about user needs. Why is it that people are currently unbanked? Why? What are the current barriers, and how can CBDCs help solve those, address those barriers? I think that's very interesting, and it's an area where central banks are also learning from one another and learning also from the private sector.
It's not just those countries, right? Jen and I were shocked at the number of banking deserts and internet deserts in the U.S. It's everywhere, right? So that whole notion of our financial system is useless without connectivity, as you've all said, is a really important part of the use case.
Yeah, and then lastly, I think that especially you've been seeing a lot of the reticence against CBDCs from citizens is in this digital era, is the government now going to be spying on all of its citizens by being able to track payments? And I think that that's from an education. I mean, I actually think that that's more of an education challenge rather than a technology challenge, because you could design these systems that even the issuer of the asset cannot see what are the users doing. So I don't think that that's actually a technology challenge, but inherently in these digital, especially with what's everything trust, exactly, the education part of making sure that there's trust in the system.
And then we come back to, Eva, your question earlier on the noise. The noise of the headline 1.5 weeks ago will not inspire trust. It will do quite the opposite. Every use case we just talked about has nothing to do with this. It's really about infrastructure and building answers to real problems. So I think finding ways to get regulators in and making this more predictable and therefore instill the trust so that these solutions can actually scale, I think is important. So the noise is not on any of the things that we talk about. It's really the investment part. And that's a digital asset that people like to invest in. There's many more other such things they invest in, but that is not what we're trying to solve.
Thank you, guys. Now, for the back of the class, can we ask the panel to explain how CBDCs will actually solve all those problems that we talked about at the very beginning of the panel? Cost, accessibility, messaging, all those things. So we have this great number of projects, that John talked us through. How is that actually going to help?
Go ahead.
So I'll start. So I think that there are certainly good elements of today's system, but there are a few reasons why we have these challenges. On cost, let's just take that particular case. There is a lack of competition in a lot of cases, particularly in cross-border payments. We rely on the correspondent banking system. There are country corridors where there are only a couple of players, and of course that means rents, and it means very little incentive to innovate. So bringing in competition, can help a lot. And I think that this is a very important point. I mean, thinking about the market structure, the industrial organization of markets. Enhancing competition can mean not only much lower costs, because different providers can compete down costs with one another, but it can also mean more innovation, particularly neck-on-neck innovation when two or more players really are pushing the technological frontier. I think also more generally when we're thinking about multi-CBDC arrangements, we're talking about an additional set of payment rails. We're talking about more alternatives to the correspondent banking network or to other rails that we have today. And I think that if you look at the value chain, the process that the payment would go through, it could be much simpler, much quicker, and this could really lead to a lot of benefits. And this isn't theoretical. I mean, I think that the prototypes that have been built have really shown that we can speed up the cross-border transactions quite a bit. We can reduce the cost. In the case of Project Enbridge that I mentioned before, by up to half. And I think that we'll always have FX conversion. We'll always have FX
yeah, we
market.
will.
But I think that some of the rents that are in the system currently can be competed down, and I think some of the inefficiencies from different messaging formats, different opening hours for RTGS systems, some of these mundane things, these efficiencies can really drive pretty tangible improvements also for end users.
on the financial inclusion one, right? There's just a white hot debate in this. So I'll share my view and hope for it, but it's going to require a lot of experimenting and testing, and I'm going to leave it to Jen to talk about some of this. So I'll tee you up for that one. But kind of the fundamental principle, right, is if you take if we've been doing research on the populations of who are not financially included, not in the system, and why, and it breaks down obviously into a number of different categories. But for those, there is a category of people who are mobile phone enabled, but for whatever reason will not go into the bank branch with a driver's license. And I'm giving a U.S. context. This does translate globally, but in a U.S. context, will not go into a bank branch with a driver's license and go through the process of signing up for accounts, which in the U.S. is a necessary step to be financially included, in one way of thinking. On the other hand, there is no onboarding required to use physical cash. Right? No instruction manual, no onboarding. Anyone can use it, and so that mobilely enabled population who wants to be able to transact online, their mechanism is to go to the grocery store or the drugstore, buy a prepaid debit card, and now suddenly they can at least transact in some way. The notion of, can we have the dialogue around comparing the standards around physical cash and not needing any onboarding or AML KYC until you trip over $10,000. Can we create a similar construct for digital currency? What would that look like? And that puts then all the importance and weight on the digital identity and wallet infrastructure. And so can we get enough confidence, or introduce enough confidence in that digital wallet and digital identity infrastructure to enable them to use something that's more like physical cash and not trigger the full AML KYC process as it is today, where then that requirement is to go into the bank branch. There's a lot of complexity in that, and I'm glossing it over, but are evaluating that whole dynamic and what the users actually need. What do we actually need to prevent what kind of either financial crime or societal value choices we have versus the value of getting people more financially included, and can that motion of a different standard to use a digital identity wallet infrastructure to start to transact, to start to amass some history, does that serve as then a jumping off point for greater to then decide I'm gonna open an account and be much more financially included. So it's an education, it's an enablement, it's an end user construct. It is deeply complicated, and it requires a lot of experimenting. Jen.
I feel like we're going down the line. Go ahead, Michael. I'll pick up.
Okay, so it's a real problem, David, what you just described. So the tripping over too many rules and regulations, which are not risk adjusted to the actual use case. But we're not starting from zero. Financial inclusion has been around for a while. Over the last 5-6 years, I think we managed globally to pull about 800 million people into the formal financial system. So World Bank numbers from like 6-7 years ago, 2.5 billion, we're at 1.7 billion. That difference was because some of these things were actually addressed. In Africa, you can have situations where basically the mobile phone provider serves as the authenticator for you to do a transaction. That's good enough. That's risk adjusted. We should learn from some of that. We don't need to start for everything from zero. We should take the promise of the technology, take the learnings from the past, put it together. That's one point I just wanted to build on. Now, you talked about cost and efficiency is one of the issues that we can hopefully address in a better way in non-competitive spaces. And I think that's one lens to look at it. The other lens to look at is the cost and efficiency that the solution drives beyond the payment itself. The payment is actually not, it's just a minute problem. If you can get a payment with all the data attached that you need to have as a company, so you don't have to have an accounts receivable department with 10 people, the cost saving of that, in addition to a payment cost that is lowered, and the overall productivity boost we can expect if we do this well, I think that's the real goal here.
So, sorry to be difficult, but we still sort of feel like we haven't really addressed how CBDCs will kind of sort this out. Jen, maybe you're...
I think I'm going to add complication, actually.
Excellent, let's do it.
To the discussion and try not to fall off this chair while I do it. So let's take financial inclusion, for example. I don't think there's a universal framework for defining financial inclusion and the associated goals. At a minimum, I will say there's not one in the United States. And I think that's problematic because inclusion in the banking system varies by culture, economy, race, gender, all of the socioeconomic factors that you can think of. It's a very complex topic. I think there is a lot to learn in Africa and the work that particularly women and bringing women into the financial system there in an untraditional way, right? Not necessarily by signing them up for a bank account using their mobile phone. But again, women's access to mobile phone varies by culture. It's not monolithic in the entire continent of Africa. So I think one of the challenges that is here when we're defining our problems or the outcomes we're looking for, and we're looking at what principles we want to anchor to, is how do we create a very big tent to bring in all of those perspectives and start to have a more holistic framework about how we are tackling this globally or nationally, right? So experimentation, I'll just pick up on that thread for one moment, which is, I think, historically, as we've iterated on the current system, that's happened somewhat in a siloed manner. So similar to the approach of how do we invite more stakeholders into the principle-based conversations, how do we invite more stakeholders into the experimentation process so that you can have both central banks and commercial banks and payment providers and perhaps consumer advocates working together on a narrowly scoped experiment to understand if there is actual impact and ability to create a positive change. And we learn if there's not, right? We learn what part of the system works now that we cannot enhance in a future state. So again, I go back to the experimentation. I will shameless plug digitaldollarproject.org. Join us. This is what we do. We bring everyone together, right, to do this experimentation in a very open way and to be able to generate data so we can make data-driven decisions together. And I think there's one additional layer which I'll add here, which is that financial infrastructure serves a societal good, and I think it's very important to acknowledge that. Access to money is the lifeblood for societies. And taking that approach and attacking how do we build that financial underpinning together, and then what we build on top of it, that's the innovation. That's where we drive revenue, right? That's where we have our individual expression in this future state that we're talking about now. But that social good, I think we would all want to acknowledge that and contribute to the process of creating, and that's how we get to interoperability and security and individual privacy in a principle-based manner. I wrapped it up. There you go.
Nicely done, nicely done. What's the singular of data, by the way? Does anyone know?
Datum.
Anecdote.
Anecdote for...
Well, you know, if you don't have data, you just have an anecdote.
Oh, for data. Okay. Agreed.
So I try to dodge your question because I don't think CBDCs is the answer to everything that
Yes,
we laid out. That is fundamentally, I think we should try. We should try hard. And there is promise in the technology. It has a lot of potential. But it's also pretty clear it won't be the only reason that these issues will be solved. If you look at, let's say, take the Monetary Authority of Singapore, one of the projects that you were talking about, they're talking to central banks in Southeast Asia to connect their real-time payment systems. That gives you, these systems have ubiquity in each country. You connect them, you get ubiquity across 2 countries. At minimal cost, high efficiency, that's another answer. And we should take it if it solves somebody's problem. So it won't be the answer for everything. So,
Sorry, Yuval, go on.
I was going to go in a similar direction, but actually to take what John said, which is, to me, the way I think about CBDCs, but actually other payment platforms is, I think that the opportunities, if you're going to generate a system that is easy to use, efficient, has a lot of competition, I don't even think we can think about how it's going to solve problems. And I take a lot of analogy to what open banking did to fintechs. So open banking just said, well, now if you're a tech company, you could access a core banking system. And who would have thought all of the banking innovation or the fintech innovation that happened as a result of that. And I don't think, very similar to the iPhone and the App Store, create a digital platform that is easy to use. If it's CBDC, if it's credit card rails, if it's all of these things, make it easy to use. And I just think that the number of opportunities is not something that we can even imagine right now.
I do want to spike the ball though on the aspiration, right, of the problem to be solved, right. It is Jen and I had the privilege of sitting with one of the Fed governors, I will not name which one, who immediately went down the we need to put an end to the check cashing storefronts, the whole use of the expense of remittance payments. It is super expensive to be financially excluded on a percentage basis. So on a relative basis, we are making it it is the hardest for the people who don't have the access, and that's just dead wrong. So with that aspiration, and to Yuval's point, to all the points, right, of if through simplicity and new architecture and modernization and the benefits of what new simple architecture can provide, we can reduce that cost and bring people in a more natural way and address that. Let's just be that's the goal. Right, let's not make it that it's the most expensive for the people who are least included. The crypto community has given us the perfect demonstration. Right, I could pull out my phone, I could go onto Coinbase, I could sell an asset and tap for a sandwich about 90 seconds later. Right, that is simple, that is fast. But it's but now let's do that with fiat currency and we let's have that ambition for the rest of the financial infrastructure. It's being demonstrated now. We have to now just broadly modernize.
Thank you, John.
I'll give one example from the central banking world. Picking up on what Michael said about retail fast payment systems, there are quite a few countries, about 60 countries now, that have retail fast payment systems. And in a lot of cases, those have already shown, the tremendous progress that you can have in terms of costs, in terms of financial inclusion, having competing providers each able to offer payment services. So just one that we wrote about recently is Brazil. And in Brazil, since November 2020, when Pix was launched, this is the retail fast payment system that banks and non-banks offer services on. It's actually been adopted by 2/3 of the population. People can use a QR code. It's very simple to set up. Merchants on street sides, have a QR code and allow for smartphone payments. The average cost of payments is 22 basis points for merchants, so that's quite a bit lower than the cost for credit or debit cards. And there are about 50 million Brazilians who've made their first digital payment ever. So in terms of financial inclusion, this is not a CBDC project. This is a retail fast payment system, like the Fed Now proposal in the United States, or like the Unified Payments interface in India. But it shows that having this open infrastructure with competition, with banks and non-banks providing these competing services, can be really powerful and can do quite a bit for efficiency and inclusion.
Thank you. We're going to have to stop, really. So I'm just going to have one question to close the panel. You are allowed a yes or no answer. Will SWIFT exist in 5 years' time? John?
Yes.
Yes.
No.
Yes. 5 years? Yes.
Literally the same answer. 5 years, yes.
Well, we'll come back in 5 years and discuss it. Thanks so much.